This could change everything. Most traders and investors spend hours seeking to decode the market. We'll go through it in under 20 minutes together. JP Morgan predicts 5 rate decreases up to December. Cheaper mortgages, cheaper credit cards. Please make sure that you watch all the way through. There's some very important information in this particular video and you need to watch all of it to understand it. The CPI has just come out. The CPI was projected to come in at 2.8. It came in at 2.7%. But core CPI was hotter. They projected 3%, 3.1% came out. If you're liking the video, please smash that like button. And when we look at the Masterclass chart from TM4, we can see Bitcoin and the Nasdaq. They actually love inflation. When inflation goes down, the indexes go down as well as Bitcoin. Inflation is not such a bad thing, and we can see that the money stock M1 and M2 are going for it as well. Also, the CPI is increasing. You can see that there. One thing that we don't want to see is the inflation rates start to curl down and over. We've seen this before and it is nasty. Inflation information is really complex. You can see the core CPI and you can see the variety of different things that influence that figure. Core CPI strips out food and energy. This is just something that happens with life. I thought this was really good. After 2 hours of sitting watching the lake, I realized it was somebody's fence. Now, what does it mean? It means that you might be looking at a chart and you might say, oh, I'm going to get in now, and the chart turns against you. Things don't always go as planned, and that's perfectly fine. Keep your losses small, dust yourself off, wait, and then get back into it. How you handle failure in life is really important. Inside the CTKS community, we say we either win or learn and never blame. Failure simply doesn't exist. It's the way all these disappointments, stress, anxiety, setbacks are the way to create wisdom. Don't waste them. Use them. In trading and investing, your failures or your losses, they're not failures, they're just input from the market. Please let me know in the comments, what is your approach to learning from the markets and from life? If you get a disappointment or a setback, did that disappointment and setback just take you out of the game forever? Unfortunately, it happens, and all too often. One way to make sure that you supercharge your mindset is you can search on YouTube for the and the at's really important, CTKS method. It's a channel that I just started. Go to playlists and see all of these songs here. They literally will supercharge your profitability, but they will do far more than that. They're infused with positive excellence. They will give you the life that you've always dreamt of as well. Just when you thought it was safe to go back into the news, China urges firms to avoid Nvidia H20 chips after Trump resumes sales. Now, this is really interesting. On social media, a commenter just said that China orders tech companies including ByteDance, Alibaba, and Tencent to suspend Nvidia chip purchases, citing national security concerns. Now, this was a fairly large account, but if we go to the Bloomberg article, which was the source of this information, notice that it didn't constitute an outright ban, and many of the companies, the Chinese companies, may not be ready to switch to local semiconductors. You must be really careful of the sources that you listen to. If you're making buy or sell decisions based on the news, I would suggest please don't do that. We even have a rule for it. It's Rule 173, be independent from the news. Getting your mindset correct is incredibly important. And if you're liking the content so far, please smash that subscribe button and don't forget to like the video. If we look at this particular post from social media, new model shows that Bitcoin could reach $10 million per one Bitcoin in less than 6 years and $20 million per Bitcoin in 10 years. What is this news supposed to do? Well, the Nvidia chip was supposed to make you sell. This one is supposed to make you buy. But what is really happening inside the economic system? The CPI figures were released, and what we can see already is that there's a 94.4% probability of a decrease in the federal funds rate in the next FOMC meeting. This has got people really excited, and we can see that the stock market reacted accordingly. And if we look at global markets are in a definite uptrend, and the Russell just went absolutely nuts in the past session. We're on track for the strongest recovery ever following a 20% drawdown. It is not a naturally based conclusion that we're going to come down over the next month or so. That's not the conclusion. It could happen, but we could just as likely continue up. There have been cases where we've seen upward price momentum in what are typically downward seeking months. You must be flexible inside the market. And right now, gold and Bitcoin are the best performing asset classes right across the globe. The S&P 500 looked really wobbly in the past trading session, but it managed to hold the line and get across that 64.30 level of resistance. Now, something interesting happens. When you get a big green bar, what comes next? Another green bar or a red bar? What about this one? Another green or a red? Look at that. That completely retraced that move. And then just keep this in mind, please, people. It's really important. Just because you've got green doesn't automatically confirm that the next will be a blowout. In fact, it often doesn't happen. And if it does, it doesn't happen for long. You always get these retracements, always backwards and forwards, backwards and forwards. There's no need for FOMO. Looking across the futures in the past 24 hours and a little bit more, we saw that the futures went absolutely nuts. Look at the S&P 500 futures, the Nasdaq futures, the Dow futures, and the Russell futures went insane. Why? Because there was a very strong structural resistance level, and the shorts were inhabiting the other side of it. And as soon as the Russell broke through, the shorts got absolutely and utterly crushed. Now, this is a chart that I need to draw your attention to because all may not be well inside the market. It is not a reason for concern, it's a reason for positioning. When we look at the longs, the Bitcoin longs, they're going up at the current time. The shorts are coming down. But we've got a bit of an issue here. This is the inverse VIX. Now, the inverted VIX typically throws a fairly good signal, and we've seen a very big jump up inside the VIX, and inverted, it looks down. This is something that you need to be aware of. Sometimes the market can shrug something like this off, but not too often, and it could be pointing to negative price momentum, so please be careful. This doesn't mean freak out and sell everything, it means just watch the charts. It's going to be important. Heisenberg, over the past couple of sessions, has been putting out stuff like this. Now, it's pretty damn interesting analysis. Now, what does it mean? If we get to here, are we coming back to here? Now, if that is the case, crypto will come back with it. The stock market will come back. Is it the case? Is it not the case? We must just observe what price actually does. One thing that may just lend weight to the fact that it's not going to happen is earnings sentiment has been absolutely incredible. The markets are driven by earnings, and the earnings have been awesome. Always remember, it's always up and down. Across the past 24 hours, we've had literally $500 million worth of liquidations, with the majority being short liquidations. There is the possibility to move up to the 123,420 mark. Of course, around 18,000 is also on the cards, strictly from a liquidity play perspective. But this simply isn't good enough for us. We must know the structure. At the shooting of this video, Bitcoin was $119,878. And when we look at this, we're just coming up through this overhead structural resistance, and we're just testing. If we manage to hold the 120,000 and just seek to flip that as structural support, we're moving up to the 121,200. We can't move up to the 123,400 odd level if we can't get through these two structural overhead resistance levels. If we're moving down, we favor around that 118,700 mark or 117,900 level. And we know that we've got to also look at total crypto market cap, which at the recording of this video was $4.01 trillion. We have this overhead resistance at 4.04, and it's really interesting that overhead structural resistance at the 4 trillion was not really that great. It's much more solid around that $3.97 trillion mark. One thing that we do is that we look through the cheat sheet. The cheat sheet will give us an understanding of where things are going. And the key in looking at the cheat sheet is to look at the structural levels. For example, when we look at the S&P 500, we can see that we came through a very, very substantial overhead structural resistance, and we've just pumped up and through a previous all-time high. If we hold the 64.30, we're going higher, but if we lose it, we're coming back to at least 63.96. And we can see the Nasdaq is also doing well, the Russell is doing well, and the Dow. With the CPI data coming in, the markets were very reluctant to rally. In fact, the VIX went up, and that's what drove Bitcoin downwards. But after the CPI came out, we saw the VIX drop off a cliff, and Bitcoin and of course the main markets and all the stocks and components of the main market go for it. Now what we're seeing right in here is something a little bit concerning. This is from row 1. So this is the VIX, the Dixie, dollar yen, the 10, the 2 and oil. But it's here that I want to draw your attention to. If we look at the VIX futures, they've just spiked up in an ugly way. It's really ugly. We'll drill into that in a little bit more depth, but if you overlay the inverse of Bitcoin, it typically goes in line with where the VIX is going. So if the VIX is spiking up like this, we would expect downside negative momentum to play not only into the crypto market, but also into the stock market. One thing to understand, when you have a panic inside the market, and this is not a panic yet, the panic is going in the opposite direction. People just think, okay, Fed rate cut, everything is great, and they'll be piling in. This is a cause for concern, and I wanted to keep you aware of what you need to be looking at. Does it mean we should just sell everything? The answer to that question comes back to you and your risk tolerance, and your investing and trading objectives as well. For me, as soon as I saw this spike, I thought, I'm not really wanting to be in this market right now, and I closed my positions. I'm waiting for things to consolidate and to tell us where they're going. As soon as that happens, I'll come back in. Now, one of the things to just remember when we look at Bitcoin, just as a normal chart, so you can see as the VIX increases, that typically puts downward price momentum inside the crypto space. Sometimes it doesn't, but the majority of times it does. And we can see crypto going up at the current time. And that's largely because the VIX has been coming down and down and down. And then when this happens, what if the VIX starts to spike up? Now, please let me know in the comments, what do you anticipate? Do you think that for example, the crypto market and the stock markets globally will continue to rally hard, or do you think they'll start to pay attention to this VIX spike? You must always have a three-dimensional strategy. Just because a signal is thrown, it doesn't mean you have to act. I act because I'm doing active trading. Also, my focus is on losing the least amount possible. I will typically keep my losses under 1%, because 1% is very easy to make up. But when I look at a thing like this inside the market, I do pay attention. The other thing to note is that sometimes signals inside the markets can take hours and hours to play through. And this is one of the problems of the stock market. It's not like crypto, which is exponential by nature. When we look into row 2, we can see that junk bonds are going for it at the current time. Gold is starting to base. Silver is starting to put a bit of upward pressure into prices. The euro dollar is going up, and we know that DXY was coming down. So you can see that there. So when the VIX comes down, typically the dollar comes down, the yields come down, and we can see that the 10-year is actually going up, but the 2-year came down. And the DXY and dollar yen are like best mates, they hang out together. So when you see the euro dollar and the Aussie dollar, they are also really good friends, they hang out as well. So far, the index futures are coming up. Just remember that VIX spike. There is undoubtedly positive momentum inside the crypto market and also inside the stock market. It's very unfortunate that the VIX futures decided to spike. But hey, this is the industry that we're in. And the inverted VIX futures is this purple line here. Please let me know in the comments, what is your strategy for the next 24 hours? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.